What is up, you guys? Welcome to session number 63. We are coming off the PCE report, and we're going to be getting into that in a moment and seeing how stocks are reacting to that report here. So we have Dow slipping Thursday, but stocks head for a winning February. So let's dive in. So we have the Dow Jones Industrial Average declining today. Today is leap day, and it's the final trading session of February 2024. But we have major averages heading toward a winning month. Investors also digesting a key inflation metric, the PCE report. So we're going to be diving into those numbers in a second. We have Dow slipping 27 points or 0.1%, S&P rising 0.3%, and then NASDAQ adding 0.6% today. And let's just get into it now. The PCE data show the Federal Reserve's preferred measure of inflation was above central bank's target in January. There were also signs that the consumer spending remains robust, guys. Core personal consumption expenditures price index, we have that increasing by 0.4% for the month and 2.8% from a year ago. And that matches the Dow Jones estimates. Headline PCE, which includes food and energy categories, increased 0.3 monthly and 2.4 on a 12-month basis, compared to respective estimates for 0.3% and 2.4%. And that is based off of CNBC live updates here. We also have personal income rising 1% month over month in January, well above forecast for 0.3%. We had pending home sales having a surprise drop in January. Pending sales declined 4.9% for the month, much worse than the 2% projected increase from Dow Jones consensus. So we have stocks in the news today. Snowflake shed about 19% after announcing retirement of the CEO and sharing disappointing product revenue guidance, guys. So guidance of revenue in the next year, they had disappointing numbers. Meanwhile, Okta, AKTA, popped more than 19% on strong results. So that is pretty much the news of today. We have really PCE coming in on estimates, guys. So let's now dive into technical analysis, guys. Let's dive into the Move 30 portfolio here. We're looking at the S&P 500 here, and we are really stable here with a high on the 6-month chart at 510.13. It is trading at the 507 on the 6-month chart here. We are seeing it really rise pre-market there, and really consolidating. If we look at the 5-day here, if we look at the 5-day, we saw it really consistently selling off here due to this inflation data this week. Really popping here, coming back down, popping, coming back down, and then it really popped right before the market opened today, with the PCE report making the high of 508.85 there, and coming back down, hitting that 200-day, and now bouncing back up right here at the 507. So that's the 5-day chart. Let's go back to the 6-month, and we're looking pretty good. Seeing a potential bounce here off the 50-day, and we're probably going to see it really, pop. So we'll see, guys. We'll see what happens. We're still awaiting major Fed news. Obviously, PCE report came in expectations. If that did not come in expectations, then we could have saw the market really sell off today. So we're really going to watch it and see what happens in the next couple weeks here as we await that March meeting. If we go to QQQ here, let's go look at their 6-month chart, and we see it really popping above. As QQQ is more tech heavy than SPY, S&P 500, so it's more volatile. So we see it really popping there pre-market, and really a similar chart than SPY, but it's more volatile than QQQ is more volatile than the S&P 500. So on the 5-day chart on Qs, see a similar chart than SPY, really popping here pre-market up to the 39.26, now trading at 438, close to that high there. So that is the 5-day chart on QQQ. That's our favorite ETF for the overall market, just because we like, tech heavy ETFs. QQQ is a 50% tech heavy ETF. So that is pretty much how the market is reacting to the PCE report today that just came out. Now, we've been actually looking at our QQQ position. Obviously, we are up on it. We're up 426, 4%. That's still not enough for us to really trim, guys, especially, per share, on a per share basis. So we're going to wait to trim on QQQ. Our mission is to get to that 100 share to really start doing the daily, using it as collateral to do daily income on it for cover calls and cash secured puts. So that is, we're really awaiting that. We're only at the 22 share mark. So building that QQQ position slowly but surely. We are still cash heavy, waiting for a really, we're waiting for a, sell off down to the 200 day to really add back into Q. So obviously we see this bounce going on right now. So we're, gonna still hold our position. We were testing to see if this would come, the price would come below that 50-day on its way toward the 200-day, but that did not happen today, based off numbers coming in on estimates. So we were waiting something like a move like this where we did buy in when it did break below that 50-day moving average. We did buy in heavily, then. So we're gonna wait, guys. We're dollar cost averaging on it. We're just waiting, timing, and seeing, technical analysis and trying to, wait for good opportunities. So that is pretty much our QQQ position. As mentioned in earlier trading sessions, we are still trying to figure out a new option strategy when it comes to selling, options, cash secured puts, and cover calls. Obviously, we want to try and get the QQQs, as I just mentioned, back up to the 100 share mark, but it's gonna be a while, guys. So we're trying to really make income in the portfolio with other stocks for the temporary time being. We were looking at maybe doing a TQQQ, maybe buying 100 shares and then dollar cost averaging in over time, because TQQQ has that decay, so we really want to try and avoid that as much as possible, because if say QQQ goes down 30%, that means TQQQ goes down 90%, so it's a 3 times leverage, guys. So really got to watch out for that. But if you dollar cost average into it, then you could really take away from that decay as you are adding in every day. So we might do that. We are still deciding if we want to do that or not, and then run, obviously, run some cover calls and cash secured puts. They are weekly ones, so they're not daily as QQQ and SPY offer. But we really could see us doing this. We are still thinking about it, so we'll see what happens. March 8th will present good numbers. So that is the update on the options. We are still deciding what we want to do strategy wise on selling options, the wheel strategy. So let's now dive into the $10 buy of the day. And we only see a few stocks that are down on the day. We have Lockheed Martin, Nike, Tesla, Apple, Coca-Cola, and Walmart. Let's go ahead and look at each one and really decide what we want to try and get today. We have Lockheed Martin trading at the 56 RSI level. We have Nike at the 43, really coming back down, meeting that 200-day moving average. We have Tesla, 54, really coming back up to meet that 200-day, but really can't really break it. So that's fair value range there. Apple, this is interesting because Apple is really at that support level there. at the 180 mark. And, you know, if we see this break down to the 170, we're going to be buying this. We could even just buy it today too, to make sure, see if it bounces. But I don't know. I think we're gonna. So we'll see if we want to buy Apple today. We have Coca-Cola at near oversold values at the 32, meeting that 200-day. This could be an opportunity for us to buy back in to Coca-Cola, as it did reach a 61 high there. Very stable at, you know, in between the 57 and 61 mark there. We have Walmart's really selling off back down to that 50-day moving average at the 43 RSI level. So I think it's going to be between Apple, Coca-Cola, and Walmart today. You know, I really am thinking it's going to be Coca-Cola. We have Coca-Cola at 96 market value. We have Walmart. Where is Walmart? We have Walmart at 112, and then we have Apple, obviously. We have Apple. Let's see here. Yeah, we're gonna buy some Coca-Cola, guys. We're gonna add into Coca-Cola while it's trading near those oversold values. So let's go ahead and do a $10 buy of Coca-Cola. All right, amount $10, order quantity 0.16681. Buying Coca-Cola in near oversold values. All right, so we got filled at the $59.93 price on Coca-Cola, guys. So that is our $10 buy of the day. We are even thinking about upping this unit size here in the second quarter of 2024. You know, we are buying $10 a day. We do have a very, you know, heavy cash position. We might even bump it up to 20 or 30. We are still deciding what we want to do with, you know, the unit size of buying per day. We buy every day, guys. Every day we buy a stock. We have 30 stocks in the portfolio. Obviously, some present a deal every day, some don't. So we, you know, buy the ones that are presenting deals every single day. And, you know, we have a unit size of $10 we started with, and now we're probably going to bump that up to maybe $20, $30, and then start really trimming the winners, and then investing in the ones that are down on the day that are presenting deals. So that is still in the works. We're going to really just see what we want to do when it comes to that. So you will, you know, see us really present that in, I believe, the second quarter. I think we're going to have a really solid plan on what to do, the option strategy. We're going to rebalance our portfolio, take out the, you know, stocks that we don't want anymore, and then add the ones that we really want to get into. So we were really going to, you know, pop off in the second quarter, rebalancing the 30 stocks. Obviously, we're going to keep most of them and take away the ones, you know, some of them that we don't want anymore, and add the ones that we do. We're going to up the unit size, hopefully to $20 at least. It could even be up to, you know, $50, but we'll see. We want to go slow. We want to go slow into this, especially when, you know, stocks are trading at all-time highs. We don't want to do $50 a day and then all of a sudden stocks crash, and then we have to go back down to, you know, $10 when it should be the opposite. When we should be, you know, investing maybe 20 right now, and then if the stocks, you know, if we get into correction or stuff like that, then, you know, we could start upping that, you know, unit size heavily to really buy at market lows. So but right now, you know, we're seeing interest rates about to be cut this year. Federal Reserve really looking at this key inflation data coming in on estimates. Never know, guys. You never know what's going to happen. We have a March meeting, we have May meeting, June meeting, July meeting. So it really, you know, just depends what, you know, Federal Reserve does, how stocks react. So we'll see what happens, and I think Q2 will find out more information on what we want to do with unit size and stuff like that. So that is training session number 63. I hope you guys, you know, have a wonderful day ahead. If you guys are not a part of the Discord yet, go over to mogufellas.com, go to membership, get that invite while it's free. I want to thank you guys so much for watching. Smash that like button for the YouTube algorithm, hit that notification bell to get, you know, updates on when we post. Thank you guys so much for watching. Hit the outro.